Hello, everyone. Welcome to this live stream where we discuss the trading week ahead. And it's going to be an interesting week because, as we saw last week, to recap, Tesla went down a lot. So Tesla had a major problem together with the market. And, that is not too surprising because Tesla is correlated right now without too many catalysts with the market. So what we saw is on Wednesday, as you probably are very aware of, the Fed came out here with some more hawkish perspectives on rates for 2025, 2 rate cuts instead of more. And Jerome Powell had some negative comments on why he thinks they might have to take the foot off the gas of these rate cuts. And that sent the markets into a tailspin, 4% down the Nasdaq, I think 3% the S&P, and Tesla was 8 to 9% down. So that's very, very bad and created a big problem. And the question is, big picture, we were on this crazy run up, as we see here, right? We were on a crazy rampage since November 5th, since Trump became president and Elon became co-president, whatever you want to call it. And, the market went crazy on Tesla. And we were all very excited. And I was starting to warn up here at 480. Well, we are a little bit unhinged at this point. So the question is, what does it all mean? And is the trend broken? Is the Tesla rally over at this point? Or is it going to continue into January? I think that is the big question here. And that's what we want to discuss. So first of all, I want to remind everyone that we can have short-term perspectives on the stock, but we always have to consider the big picture. When we look at a stock and we want to make sure we are smart, it's very important to consider the big picture. Are we actually understanding at any point in time what kind of stock this is? Like, are we a hot stock? Do we have a lot of problems? Are we just looking at technicals? Are we depending on the market? And I want to just start this with a quick recap of my valuation video. I will just give you a quick insight into how I think about Tesla valuations. And that insight can be very helpful. I have a dedicated video on that you can find on the channel. I think there's like 3 or 4 videos ago where I'm talking about what the right price is or how I determine the right price. Actually look at Tesla. And this is a very important model so we understand the big picture. So here's the model. I can zoom in even a little bit more. And in this model, what I'm doing is I'm basically answering the question, what is too expensive for Tesla? My valuation model, that's another video, like you can find that too, predicts a share price of 10,970 by 2030, right? I believe Tesla is very likely on a conservative, perspective to go to 10,900 by 2030. It's a whole debate why. I mean, that has to do with Optimus, with the robot revolution that is going to kick off in earnest, I think, latest in 2027 and really goes to scale before 2030. People underestimate what's going to happen. And of course, FSD is coming this year and is going to start to scale probably in 2026 and 7 to hundreds of thousands of robotaxis. And these are enormous margin drivers. And Optimus especially has a nearly no ceiling to where it can go. So 10,900 is based on the discounted cash flow, very conservatively looking into the next 10 years in each year. And I'm arriving at this 10,970 price point. Why is this important for tactical trading? Because this gives you the big picture. If you're at 430 today, right? Let's assume you can buy the share today at January 2025 at 430. Here, I'm creating a CAGR model, compound annual growth rates. So that's your annual returns until 2030. If I'm right about this price point, I think it's going to be more than 10,000. This is a conservative perspective. It is dependent on certain milestones that are being hit, but it's very likely that Tesla will hit these milestones. So if 10,970 is correct, and you buy the stock at 430, you will make 91% per year in average compound annual growth rate. 91%. That's a lot of money. So the question, should you buy Tesla if you believe this model? Well, it depends if you have an alternative investment that makes you more than 91% a year. That's very unlikely. Even Michael Taylor, of MicroStrategy, says Bitcoin makes you 60% long term. So 91% is a pretty strong number. So if Tesla would go up to 800, let's say in January, I don't think that's going to happen. It's definitely not going to happen, in my opinion. But let's assume for now it goes to 800. Even at 800, you're making 69% a year. So if you buy into the strategic valuation models that are circulating into mine, but also other people arrive more and more at similar conclusions. All the analysts who actually understand Tesla and have like the skills to do analysis, they're all arriving at 6 to 15,000 in 2030. So this becomes more and more consensus among the people who know stuff. And so you can see that the price point here doesn't really matter because Tesla is so dramatically undervalued based on future cash flow. So that is the big picture here. And in this context, right, in this context of a bigger picture, I view the valuation as very, very cheap still, and will view it as very cheap for quite a long time, as long as Tesla hits its milestones, which it seems it will. So we have Optimus coming probably next year. We have some important catalysts. We have FSD for sure coming. And we have the cheap sub $30,000 car coming probably in January being announced. That's all great. But in tactical trading for this week, for the week after, for the next month, the question is this uptrend, the strong uptrend the stock was on, is that broken or is it not broken? So we talked so far about strategic valuation, right? Fundamental valuation, and this looks all very cheap. But that doesn't mean Wall Street is going to accept that. And it doesn't mean that Wall Street is going to price in these things. So how do I think around that? I have that concept of hard catalysts. So hard catalysts are events in Tesla's corporate history that force Wall Street to drive up the price. Okay? Hard catalysts basically leave Wall Street no choice than driving up Tesla's price 3, 5, 10x. We saw that in 2020 when Wall Street had ignored the potential of Model 3, even though it was screamingly obvious that it's going to happen. I loaded up on shares like crazy in 2019. I told JP Morgan about it, right? They didn't get it. So these hard catalysts take basically discretion out of the equation and say to all the analysts and all the investors on Wall Street, like, dude, it's not up to you anymore. You have to buy the stock now. Why? Because they unlock hard revenue streams, right? They just basically force the analysts to open their little spreadsheets and say there is an FSD, revenue stream. It's active, it's live. The money, the dollars are trickling in, and soon they're streaming in. And you cannot deny anymore this thing exists as a revenue stream. And you cannot deny there is crazy growth. And there are people standing all over Austin and LA waiting to get into their robotaxis. Okay, that is a hard catalyst. And I like these hard catalysts because they force the stock through the roof, especially if it was suppressed before. So now, why did Tesla rally from 260 to 430? Was that a hard catalyst? And the answer is no, it was not a hard catalyst. And that's what I have been warning about. And my warning will now become stronger in this video. I'm going to tell you guys, Wall Street started to accept and anticipate what I'm saying and what others are saying, what Fazad is saying, what Gally is saying, what a lot of smart Randy Kirk is saying, what Søren Basher is saying. So Wall Street started to accept the new models that price and future value. But here's the point. Wall Street does it at their own discretion. They can stop believing us at any point in time. Because right now, we do not have hard catalysts. We cannot point to dollars coming in through robotaxi. We can just point to my model. We can point to FSD version 13. We can point to lots of videos. But if Wall Street loses the appetite for believing us, they will stop believing us. And we have nothing to force their hand. We will have something to force their hand once the revenue is real. And so that puts us into an interesting position right now. We are basically at the mercy of Wall Street until we have hard catalysts. Wall Street has been comparatively nice to Tesla. If they decide they want to keep buying into my narrative, for example, they will keep doing that. But if they decide they don't, they will drop it like a hot potato and the stock will drop. And so we are now entering a phase where we are relatively high. Well, we are low compared to the fundamentals, but we are high compared to where we come from and compared to what hard catalysts came into the market. None really. And in that phase, we basically went up, and we know we are going to end up here once the hard catalyst hits. But there are two options. We could just creep up because Wall Street keeps buying into that thesis until this hard catalyst hits of FSD, or Wall Street drops the ball. And they could just do that. We can't do anything about it. So we are at risk. That's what I'm saying. The stock price is at risk because there is no fundamental forcing function that forces institutional investors to stay in the stock or buy more. That's the bad news. The good news is the sentiment is still positive. It could still make them buy more, but we can't be sure. And we can only be sure once Robotaxi is live. Now, we know some things about it. I think we can be sure Robotaxi will be live in Austin, maybe in LA, maybe in Phoenix, maybe in San Francisco, at some point in this year, next year. I think we are looking at 3 to 9 months, right? That's kind of the window between maybe March, April to latest September, where we will see the announcement and the actual launch of some form of pilot. And I do think this pilot is a hard catalyst because people will pay money, people will stand in line for robotaxis, and then it's game over in my opinion. And then people have to price it in. So what does it all mean? I think once that happens, once that hard catalyst of FSD happens, that adds momentum into the stock that could drive it to 1,000. Definitely to 600. That's my conservative price target for next year. But if we reach 600, that can go up to 1,000 within 2 weeks later because how Wall Street works, like it's momentum, and then drop back, whatever. If Optimus comes on top of that with some form of launch or announcement, then we are talking about potentially much more. But before that, anything can happen if there is a macro situation or Wall Street loses appetite, whatever. And so when you want to trade Tesla a little bit, and my strategy is I hold a very big core position of Tesla that I never touch, and around that I'm trading so to generate alpha, which worked pretty well this year. I'm up 170%. Tesla is up 74 or something. So I have over 100% relative alpha over Tesla with a pure Tesla position. So I did nothing else in Tesla. And I did that with these kinds of anticipated trades. I got totally destroyed on Wednesday, by the way. So I was much higher than 170. Wednesday was a bad day. I was badly prepared, but that was very tricky. So if you want to trade around the Tesla core position, the question, you have to anticipate some things. And I would say the stock right now is at risk. The stock right now is at a level that puts it at the mercy of Wall Street. And if we wanted to go higher, we will remain at the mercy of Wall Street. It can go higher, of course, but we have nothing to force their hand. We will have something to force their hand in 3 to 9 months. And so the question is, what do we do in between? If there's a market correction of 10%, I think Tesla can drop 30%. I think we can go to 320, 350. Is it going to happen? This will be heavily dependent on macro, on S&P movement. Do I believe Tesla is going to go up much, much more? Well, right now, I think the trend is broken. We would need to reinvigorate the rally through some form of news. I think deliveries January 3rd is not enough. I think they will be good, but everyone knows it. If it's 515,000, I don't know. It's going to be it's not going to be very strategic. We have all these catalysts coming, like the sub 30,000 car. So I would be cautious. Being at the mercy of Wall Street is not great. And I think we have to bridge at least 3 months in this period. There will be good news and catalysts, but they will kind of fade in comparison to macro movements in the market. So I would be not too leveraged. Don't go too crazy. That's my strategy here. And we observe version 13, maybe version 14 when it comes out. We observe if we stay on track for this hard catalyst. Of course, never short Tesla. This thing can keep going up. But I think that's what we have to do. We have to bridge that phase where it's unclear and we can't force their hand. So I hope that was helpful. This is a nice Christmas week. It's going to be a little more quiet. I would say, I maintain a very strong core position of Tesla, always will. But my tactical trading becomes very cautious now. I think I don't trust it. We are on thin ice. And we will only be on thick ice and a rally up that is forced once real things happen and once dollars trickle in through the robo-taxi revenue stream. That's when we can be safe again. In between, watch out. Okay, I think that was helpful. And I hope that was helpful for you guys. I wish you Merry Christmas. And we'll see you before the new year, of course. And hope you enjoyed that. See you soon.